Welcome to this presentation on returns under GST. The presentation is based on the Model GST Laws and Draft GST Return Rules 2016 as available in the public domain. Supplies to registered dealers have to be entered in the returns individually because of the matching concept, which involves tracing the transactions to the recipient. But for supplies to unregistered dealer, where there is no question of the recipient claiming input credit, the transactions can be consolidated. Place of supply influences the definitions of intrastate and interstate supply of goods and services. It determines whether a given transaction is subject to SGST, CGST or IGST. To know more, kindly go through my video on GST, place of supply. Supplies to unregistered dealers cannot be consolidated if place of supply is in different states. The date of place of supply has to be captured at invoice level so that it is possible to segregate the supplies. Also important is the requirement of SSC and HSN. It is not mandatory to mention the HSN or SSC if the aggregate turnover in previous financial year is less than 1.5 crores. Those who exceed this limit and those who export goods have to mandatorily mention SSC and HSN. However, if the aggregate turnover is under 5 crores, quoting HSN is optional for the first year. From the second year onwards, minimum 2 digits of HSN has to be quoted. If aggregate turnover exceeds Rs 5 crores, it is mandatory to mention minimum 4 digits of HSN. Applicable tax rate is dependent upon correct HSN or SSC. A taxable person who supplies goods and services of multiple HSN and SSC will have increased workload for filling up the returns for both B2B and B2C transactions. Keeping this broad scheme in mind, let us go through the types of returns. In this presentation, we will discuss about the requirement of GST law to file various returns, grouping them loosely into regular returns, that is returns which are required to be filed monthly or quarterly, annual returns, and miscellaneous returns. The regular returns are divided into two categories, that is general and others. Composition dealers, non-residents, ISDs, TDS deductors, and e-commerce operators are included in others. A return is filed for a tax period which is usually a month or a quarter. Section 27A stipulates that the first return should be filed from the date of registration to the end of the month or quarter of registration. Let us first understand the basic scheme of the returns mechanism. Under the proposed GST, filing of returns is the three-stage affair. In the first stage, all the suppliers will provide details of their outward supplies. This will be done by most of them by 10th of the following month. The data thus pushed into GST network will be available with the recipient for him to verify, validate, modify, or if required, delete the details. The recipient may also include the details of inward supplies received by him which have not been declared by his supplier. The time for completing this job is about 5 days because by 15th this return should be ready. The supplier then gets a copy of the changes suggested by the recipient with an option to accept or reject the same. In the third stage, the suppliers and recipients will be ready to file their respective monthly returns. The data would have been pre-filled due to the successful completion of the first two stages. The return will be filed with taxes due or refund claims, if any, by 20th. In the following few minutes, we will discuss requirements of filing returns for each of these categories of persons. First return we will discuss about is GSTR1, which has to be filed under Section 25 by all the registered taxpayers before 10th of succeeding month, except input service distributors, persons who have opted for composition scheme, and deductors of tax. The return will include details of zero-rated supplies, interstate supplies, supply returns, exports, debit and credit notes, and supplementary invoices. While filling up the GSTR1, document level details are required in the following cases. All B2B transactions, whether intrastate or interstate, are to be mentioned in Table 5. The transactions which are done through e-commerce portals are to be flagged. Interstate transactions to unregistered persons exceeding value of Rs 2.5 lakhs are to be mentioned in Table 6. Debit notes and credit notes are entered in Table 8. Those issued as a supplier are only considered. Exports, including deemed exports, are furnished in Table 10. In Table 7, total of the transactions grouped on the basis of state of supply and HSN or SSC is needed to be mentioned for all intrastate B2C transactions and interstate B2C transactions with value up to Rs 2.5 lakhs. Amounts of nil rate and exempted supplies are provided in Table 9. Optionally, these figures can be provided in Table 5, 6 and 7 also. Table 14 requires the statistical figure of total invoices issued and cancelled, including the invoices issued for reserve charge purchases. Time of supply provisions fasten liability on the supplier even before issue of invoices, on receipt of advances, etc. To know more, please go through my video on time of supply. Details of such supplies are indicated in Table 11. A transaction ID would be generated by system for each such transaction. When the invoice is raised in a subsequent tax period, the details are mentioned in Table 12 using the transaction ID so generated. Tax liability in respect of invoices issued now will be net of tax already paid earlier. In Table 5, the details of all supplies made through e-commerce portals were flagged. This data will be auto-filled in Part 1 of Table 13. Supplies made to non-registered persons will be filled up in Part 2 of the table. After the due date of submission of the form, that is 10th, the details filled up in Table 5 and 8 will be communicated to the recipient in Form GSTR 2A, 4A, 6A, etc. According to Section 26, details of inward supply has to be filed by all registered tax persons except input service distributors, persons who have opted for composition scheme and deductors of tax before 15th of succeeding month. However, data can be uploaded on daily, fortnightly or weekly basis. The recipient will verify, validate, modify or if required, delete the details relating to supplies and credit or debit notes communicated to him in GSTR 2A. For supplies that are missing in GSTR 2A, the recipient will include details of supplies, credit or debit notes received by him. Preparation of GSTR 2 has three parts: correction of data, addition of data and confirmation of eligibility of ITC. The autofill data in GSTR 2 will be corrected for mistakes by referring to GSTR 2A. Part A for inward supplies, debit notes and credit notes. This is generated from GSTR 1 of the counterparty. Part B for ITC transferred by ISD. This is generated from GSTR 6 filed by ISD. Part C for TDS deducted by clients. This is generated from GSTR 7 of the TDS deductor. Part D for TDS collected by e-commerce operators. This is generated from GSTR 8 of the operator. Table 4 of GSTR 2 gives the auto-filled details of inward supplies. The supplies which have been missed out by the supplier and inward supplies under RCM from unregistered persons will have to be added in this table. Import of goods and services have to be added in Table 5 and 6 respectively. Details have to be provided for each transaction. Debit and credit note details are also auto-filled in Table 7. In all these cases, the recipient has to mark the ITC he is eligible for, that is, he has to remove input tax credit if his corresponding outward supplies are non-taxable supplies or if he uses the goods for personal use, etc. Lastly, supplies on which ITC is not available, like supplies by taxable persons under composition, unregistered persons, etc., are to be entered in Table 8. Tables 9 to 11 are auto-filled with details of credits received by recipient. Table 9 contains the credit distributed by ISD. Table 10 Part 1 and Table 10 Part 2 contain details of TDS and TCS respectively. Table 11 is the list of invoices on which ITC has been partially availed earlier. Similar to Table 11 and 12 of GSTR 1, we have Table 12 and 13 in GSTR 2 for adjustment of tax liability on inward supplies under RCM. The last table to be filled up is for reversal of ITC if applicable. Section 25 subsection 2 states that a registered person who has submitted his GSTR 1 for any tax period may, upon notice of any error or omission, rectify such error or omission for the unmatched entries. Similar provisions exist in Section 26 subsection 3 for rectification of unmatched entries of GSTR 2. The rectification has to be done not by filling a revised return but by entering the information in GSTR 1 and GSTR 2 in the tax period in which the errors and omissions are noticed. The correction data has to be indicated separately in tables appended to the tables in GSTR 1 and GSTR 2. The information of the earlier period moves along with the current period data. The rectification can be done only till the return for the month of September is filed under Section 27, following the financial year in which the mistake has occurred, or the annual return for the financial year is filed under Section 30, whichever is earlier. Corrections made by the recipient in his GSTR 2 will be communicated to the supplier in his form GSTR 1A after the due date of filing GSTR 2, that is 15th. Under Sub-Rule 3 of Rule 1, the supplier will have the option of accepting or rejecting the corrections. The modifications accepted by him will be updated in form GSTR 1 already submitted by him. The facility of modification in response to recipient's action is available only for GSTR 2 and not for any other categories of suppliers. Under Section 27 subsection 1, GSTR 3 has to be filed on or before 20th of every month by every registered taxable person other than a person opting for composition. The return can be filed only if the previous return has been filed. Under subsection 4, it is mandatory to file return for every tax period even if no supplies of goods and services have been effected. Under subsection 2, the tax due has to be paid on or before the due date of filing the return. Under subsection 3, if due taxes have not been paid, then the return will not be treated as a valid return for the purpose of allowing input tax credit in respect of supplies made by such persons. Part A is auto-filled with details from GSTR 1, GSTR 2, electronic credit ledger, electronic cash ledger, and electronic tax liability ledger of the taxable person. The amount of ITC available in the current month is filled by the taxpayer in Part A. Tax is paid by debiting the electronic cash or credit ledgers as per details contained in Table 11 of Part B. Table 12 details the refund claim, if any, of the credit balance in the electronic cash ledger of the taxable person. If the return is not filed on or before the due date, a notice is issued in Form GSTR 3A requiring the registered person to file the return within next 15 days. Quarterly return in Form GSTR 4 is required to be filed within 18 days after the end of the quarter by taxable persons who have opted for composition scheme. This form is filled with the help of auto-filled Form GSTR 4A, which has details of outward supplies filed by counterparty suppliers and also TDS details filed in Form GSTR 7 by TDS Deductors. Details of invoices of inward supplies are to be given in Table 5. The table has two parts. First part is concerning inward supplies from both registered and unregistered persons. In the second part, supplies attracting tax under RCM from registered and unregistered persons are provided. Details of invoices of imported goods and services are given in Table 6 and 7 respectively. Total turnover pertaining to intrastate supplies and non-GST supplies are mentioned in Table 8 and tax liability is computed at this stage. Details of debit and credit notes issued are filled in Table 9. Details of TDS credit is auto-filled in Table 10 from the GSTR 7 filed by the deductor. Similar to Table 11 and 12 of GSTR 1, we have Table 11 and 12 in GSTR 4 for adjustment of tax liability on inward supplies under RCM. Table 13 calculates the net tax liability for outward supply and inward supply for the current period and prior period, if any. Tax is paid by debiting the electronic cash ledger as per details contained in Table 14. Table 15 details the refund claim, if any, of the credit balance in the electronic cash ledger of the taxable person. A declaration is obtained to the effect that there is no likelihood of the taxpayer exceeding the composition limit before the date of next return. After taking registration, every non-resident taxable person has to file a return in GSTR 5 within 20th of the following month or 7 days of expiry of his registration, whichever is earlier. ITC can be taken by such taxable persons on imports only. No other inward supply has been envisaged under the scheme of registration to non-resident taxable persons. Bill details of import of goods and services are provided in Table 5 and 6 respectively. The details of both B2B and B2C outward supplies are provided in Table 7. Details of debit or credit notes issued are also provided. Tax liability is calculated after taking credit of IGST and details of taxes paid is given in Table 8. If the taxable person prefers to claim a refund, the details are filled in Table 10. Table 9 contains details of closing stock with value for the purpose of knowing the remaining tax liability of the taxable person. Under Section 27, Subsection 6, ISD is required to file GSTR 6 within 13 days of end of the month. The return is filed with the help of GSTR 6A, which is auto-filled from GSTR 1 and GSTR 5 of counterparties. The ISD is required to add, correct or delete the details in Form GSTR 6A while filing GSTR 6. Invoice details are required for all the transactions of ISD. The inward supplies are provided in Table 4 and debit or credit notes in Table 5. Table 6 contains details of receipt and distribution of input credits. Summary of ITC received, reversed and distributed is given in Table 7. Under Section 27, Subsection 5, a person liable to deduct tax at source has to file return in GSTR 7. Details of invoices on which tax has been deducted will be provided in Table 4. The data so submitted is auto-filled in GSTR 2A, 4A, etc. The total tax liability is computed in Table 5 with details of payment. Refund, if any, is claimed in Table 6. Certificate of deduction is issued electronically in Form GSTR 7A. TCS collected by e-commerce operators will be reported in GSTR 8 within 10 days from the end of the month. Invoice details of B2B supplies routed through them will be entered in Table 4. For B2C supplies, it is enough if total of transactions for each merchant is uploaded in Table 5. TCS details are entered in Table 6 separately for B2B and B2C supplies. Details of tax liability and payment thereof is provided in Table 7. Certain categories of persons are required to obtain unique identity numbers so that exemption from tax can be extended to them. These persons are required to file GSTR 11 within 28 days from the end of the month in which they have inward supplies. Invoice details of inward supplies from registered dealers are required to be entered in the statement for the purpose of claiming refund of GST paid on such purchases. GSTR 9 is the annual return for all taxable persons except those who have applied for composition scheme. Under Section 30, this return is to be filed on or before 31st December of the following financial year. Details of expenses of the taxable person for the financial year has to be provided in Table 5 of this return. The total value of purchases of goods and services on which ITC is availed, other purchases on which ITC is not availed, sales returns and other expenditure are required to be furnished. Details of incomes are provided in Table 6. Total value of supplies of goods and services on which GST has been paid, supplies on which GST is not paid, purchase returns and other income are provided in this table. Table 7 is the month-wise return reconciliation statement of IGST, CGST and SGST along with interest and penalty. Details of arrears and refunds are provided in Table 8. Table 9 provides the gross profit, profit after tax and net profit for the financial period. Please recall that rectifications can be filed in GSTR 1, 2, etc. by the supplier and recipient until the monthly return for September has been filed or the annual return has been filed, whichever is earlier. So filing this return seals the option of filing rectifications for the period covered by this return. The simplified annual return for persons opting for composition scheme is GSTR 9A. It has to be filed within 31st December of the next financial year. Details of expenses like purchases of goods and services, imports and other expenditure are furnished in Table 5. Turnover details like value of supply of goods and services net of sales return and other income details are furnished in Table 6. Quarterly reconciliation statement is given in Table 7 for reconciliation of compounding tax and tax paid under RCM. Details of arrears and refunds are provided in Table 8. Table 9 contains the details of gross profit, profit after tax and net profit. Rule 21, Subrule 2 stipulates that every registered taxable person whose aggregate turnover during a financial year exceeds 1 crore rupees shall get his accounts audited under subsection 4 of section 42. The audit shall be done by a chartered accountant or a cost accountant. Such person shall furnish a copy of audited annual accounts and a reconciliation statement duly certified in Form GSTR 9B. GSTR 10 is required to be filed by a person who has applied for cancellation of his registration. It is called a final return. The return has to be filed within 3 months from the date of cancellation or date of cancellation order, whichever is later. Particulars of closing stock held on date of surrender or cancellation has to be provided. Amount of tax payable is determined on the basis of the declared closing stock. If GSTR 10 is not filed on time, notice is issued in GSTR 3A to the taxable person for filing GSTR 10 within 15 days. Section 33 provides for payment of late fee for not filing returns. If default is made in filing returns under Section 25, 26, 27 or 31, the late fee is ₹100 per day subject to maximum of ₹5,000. Late fee for not filing annual return under Section 30 is ₹100 per day subject to a maximum of 0.25% of aggregate turnover. Let us have a quick look at the forms before we end. By 10th of the month, GSTR 1 of outward supply, GSTR 7 for TDS and GSTR 8 for TCS are ready. By 13th, GSTR 6 of ISD is filed. This will give the recipient idea about his inward supplies, TDS, TCS and ISD inputs while filing GSTR 2 on 15th. On 18th of every quarter, GSTR 4 will be filed by the composition dealer. On 20th, GSTR 3 and GSTR 5 of non-resident will be filed. GSTR 5 is also filed within 7 days of expiry of registration. The last regular return filed is by UID holders on 28th. The annual returns in GSTR 9, 9A and 9B are filed by 31st of December. GSTR 10 is the one-time return for closure of business, which brings us to the close of today's topic. Thank you very much for a patient hearing of this presentation. Do like the video to encourage. Do subscribe to my channel to stay updated on the happenings in GST. Have a nice time.